In a backdrop of ongoing conflicts, sky-high inflation, and an impending recession, investors may be surprised to find that their portfolios have performed well so far in 2023. The Steadyhand Founders Fund, which is our medium risk balanced fund, gained 5.3% in the first 6 months, while the growth-oriented Builders Fund saw a gain of 7.8%. And these returns are all after fees. Looking beyond 2023, the Founders Fund has grown 10.3% over the past 1 year, making it among the top performing balanced funds in the country. And its long-term numbers are stellar too. The Builders Fund returned 15.4% over the last year. Now, it doesn't have the same long-term history as the Founders Fund, but the underlying components of the fund do, and you can find that history in our Q2 quarterly report or on our website. Now, we are pleased with our achievements, but our focus is firmly on the future. And in this video, I'll share our outlook and I'll guide you through our advice for clients, whether you're accumulating savings or drawing from your portfolio, including members of the recently launched Steadyhand Retirement Withdrawal Program. This program provides peace of mind for those living off their investments. If you'd like to learn more, reach out to us or check the link in the description. First, I want to acknowledge that there are real risks out there. I'm not going to diminish the headlines. These are real things happening to us and those around us. But what we're finding is that, in general, investors today are reflecting these risks in what they're willing to pay for stocks and bonds, making them more reasonably priced. And I say in general because there are definitely pockets that appear too optimistic and others that are too pessimistic. But in aggregate, things seem to be in a reasonable range. And this is evident in our 5-year return estimates. We expect bonds to average 3 to 5% returns, while stocks should be in the 6 to 8% range, aligning with their long-term averages. You can see what those look like when taken cumulatively. In the Founders Fund, we're rebalancing and sticking to our target. Our fixed income allocation is near our long-term goal of 40%. We've been gradually increasing our bond holdings in this more normalized interest rate environment. It's worth noting that most of our cash is invested in the Steadyhand Savings Fund, currently yielding over 5% before fees. Our equity weight is also close to its target of 60% and is diversified across regions and industries. So now let's get more specific about what you might be considering in your portfolio. First, for retirees, ensure your stock and bond mix aligns with your target. If you're invested in the Founders Fund, no worries here because this is what we handle for you. If you're part of the Steadyhand Retirement Withdrawal Program, then top up your spending reserve. Spending reserve is the 24 months of cash you've put aside to draw on for your monthly spending needs. Think of it like a paycheck replacement. If that reserve has fallen below 24 months worth of expenses, then contact us and we'll help you top it up. Portfolios are up, so we want to take advantage of this moment. For those who are saving, consider initiating monthly contributions to your portfolio if you haven't already. It's a great way to grow your investments and removes the emotion out of decision making. And you too need to ensure that your mix of stocks and bonds is on target, just like retired investors. This piece of advice is, regardless of whether you're saving or drawing, review your bank and investment accounts and tally up your cash holdings. Every dollar in cash loses value to inflation. Avoid cash unless it's for emergencies or a spending reserve in retirement. Rates on cash accounts, including high interest savings accounts and many GICs, often fall short of inflation, so your money is losing value. Lastly, let me update you on Steadyhand. We recently launched the Steadyhand Retirement Withdrawal Program to help ease some of the challenges of retirement. I've mentioned it a couple of times in this video. We also welcomed Samantha as the 20th member of our team. She's based in our Toronto office and focused on client service. This fall, we'll start offering the first home savings account designed to make home purchases more accessible for first-time buyers. My colleague Lisa did a video on the nuances of this account, which we've included. And speaking of video, we're increasing the amount of videos we produce to 2 per month in response to all your great feedback. And we're going to cover an array of financial topics like financial planning, inflation, taxes, and many with external experts. So subscribe to the channel to know when we've put out new videos. On behalf of the entire Steadyhand team, thank you for your trust in us and have a fantastic summer.